All right, here is your example to try. Maybe pause the video, read through the prompt, give it your best try. You're calculating companies' operating cash flows, just like we did in the last example. And again, use the indirect method. All right, hopefully you've given it a try. You should have gotten 91,000 as your operating cash flow. Let's see how we got that. We start with net income, of course, since we're using the indirect method. Start with that. Look for depreciation expense, always add it back. Look for gains or losses, doesn't look like we have any. And then go to your current assets and current liabilities. Inventory, that's a current asset. If you have an increase in a current asset, you're going to subtract it. Accounts payable, that's a current liability. If you have a current liability decrease, you subtract. Prepaid expenses, it's been a while, but prepaid expenses, those were current assets. So you have an increase in a current asset, you subtract. Wages payable, that's a current liability. If it's an increase in a current liability, you add. You should get 91,000. All right, good job, good luck.